Ever wonder why two price tags exist for the same company? Market cap shows what the stock is worth, but enterprise value reveals the whole business cost. That's debt minus cash, folks. Stick around to find out which one to use and when. Understanding these terms can change your investment game.
Moving on to thing number 5, and apologies, Gary's traveling. He's in Morocco. So I know there's a little lag back and forth, but appreciate you hanging on there with us. Part of bringing unique perspective, doing this show all over the globe, really, and getting a real macro view on what's happening to bring you everything that you need to know. Again, head over to our website, deepknowledgeinvesting.com. Use the Ask Gary feature. You could submit a question in for the show. We might cover that in one of our topics. And love to just communicate with those of you that are out there and listening, and really appreciate and thank you for your support. Moving on, final thing, thing number 5, educational topic, market cap versus enterprise value. Gary, let's start. Give us the definition, Gary, of market cap and how it's calculated, basically, because I think it's
All
the
right.
same thing.
So, right. Yeah. So a lot of times people get confused with the terminology. This is very, very basic. To calculate a company's market capitalization, which is just the value of all the stock outstanding, right? The stock market value, we're going to take the fully diluted number of shares and multiply it by the stock price. It really is that simple. And when you multiply the number of shares by the stock price, you have the value that the stock market is putting on all of the company stock. That's it. It really is that simple.
And then, Gary, moving over to enterprise value. What is it? Calculated for our guests out there, just to really give them a simple explanation of both of these topics.
So enterprise value is often referred to as aggregate value. And all we're doing there is we are taking the market cap of the company and adjusting for the debt. So you take the market cap and add the debt and subtract any cash, and that gives you your enterprise value or aggregate value, which is basically the full value of the company adjusting for the balance sheet, right? So shares outstanding times your stock price gets you your market cap, and then add the debt, subtract the cash, and now you have enterprise value or aggregate value.
And then, Gary, just in terms of these topics, when do you use market cap? When are you using enterprise value?
So you would use the enterprise value to figure out your multiple on everything on the income statement before you subtract interest. Now, I know that sounds complicated, but we're going to make it really simple. So before you subtract interest, you would have things like revenue, EBITDA, which stands for earnings before interest, tax, and depreciation and amortization. EBIT, or operating income, earnings before interest and tax. And so all of those, because we haven't subtracted interest, we would look at aggregate value or enterprise value and use that to calculate that multiple, right? You would simply say your enterprise value divided by revenue, enterprise value divided by EBITDA, things like that. Now, when we get down below that and we've subtracted interest, you would use the equity value or market cap to figure out the multiple that you're paying for earnings. And we talked about this last week, right? That's your PE, your price per share divided by your earnings per share, right? It's the exact same thing as saying, give me your market cap divided by your net income, right? Because the shares cancel out. So it's the same calculation. So if you haven't subtracted interest, use enterprise value, otherwise known as aggregate value. If you have subtracted interest, then you got market cap.